Hi, everybody. This is David Skrika. So I thought I'd do one more video here while our offer is still open. So we just had this really interesting a stock. This is exactly why I think it's really important now to look at the junior mining sector. I know this sector really well. I've been doing stuff in the sector for actually 20 years and really been closely involved with the sector for about 17 years. This was a stock that we recommended at $1 a share when it was breaking out just a few months ago. Kaminak, they just got a tender offer for $520 million from Goldcorp. And you can see, so we made 150%. We sold some on the way up, so we didn't make the full 150. But from the initial recommendation when it broke $1 here to here to the takeover bid. So these stocks look really, really exciting to me. And I just wanted to show you something really, really interesting. And with actually a lot of the major companies kind of cutting down their production and the whatnot, I think more than likely you're going to see more of these kind of takeovers and the whatnot going forward in that kind of industry. So we go look at some of these stocks. These are all, so this is stockcharts.com, and these are the top technical looking stocks that they have, right? And what we can see here is, let's look at them. This is AZ Mining. Boom. We can see this stock went from 25 cents to $1.25. This is, oh, sorry. That's Bombardier. It's one that I own. You can see that stock has done pretty well too. But this is GPR. This is Great Panther. This is a silver company. Boom. From 50 cents to 27. As high as 280. This is another one. This is Exelon, another precious metal company, from 20 cents to over $1. And notice they all have the same chart, that they had these long-term downtrends that have lasted for about 4.5 to 5 years. And then, boom, they've broken out on like huge volume. And what I'm trying to show to you is look how much different this move is in the precious metal stocks than this is Minko Silver, same thing. This slowly moved down and then this move up here. And so we can see, look how much different it is. Look how much more volume there is. Look that we broke this kind of long-term downtrend in all of these. And by the way, all the top 10, they're all precious metals companies, and they all have the exact same chart. And if you even look at some of the stocks that I own, this is New Market Gold. This is actually one that we've had in our list. And this used to be Crocodile Gold, and adjusted for when we owned this as Crocodile. We actually owned this at 90 cents. It's now almost $4, right? So these are the type of stocks that are just going straight up on this move. And like, for example, one that we have on our list. And the reason I'm telling you these ones that I have is I have no problem because I want to get into these smaller ones that haven't moved yet. This is another one. Notice how similar the chart looks on Bellow Sun right after this big basic movement and boom. But you're not going to see these kind of big breakouts, volume spiking in a bear market. This is not a bear market rally. Those people that are still telling you the gold is going back to 1,000, they are incorrect. This is a massive breakout in gold on big volume, similar to what happened in 01, 02 in the gold stock. So the question is now, like, where do you want to be? We've seen a lot of these stocks going from 20 cents to $1.50. Now, a lot of these stocks will probably continue to go higher, like Bellow Sun. The reason that I still own some in this is that I think that if we get gold going back to the highs of 2011, which I think it will, this is a stock that can be much, much higher than it is today. But I also want to get into some of the juniors, and we're just about to recommend a new one today that have upside that, haven't really moved yet. Because see, what happens in the gold bull market is the first stocks to move are the Barricks, and then we saw those smaller producers and the whatnot. Barrick has actually been moving higher since last summer, right? You can see it bottomed here last summer, had a little move higher, and then really broke out recently. And this stock is Barrick, and this is Barrick has tripled from its lows, okay? So, and I own some Barrick, by the way, as well, right? So, these, you look at, something like, Pan American Silver, same kind of thing. These large cap companies have had good moves off their lows, right? And have acted really, really well. But the next move is in the junior. So we've seen the trickle down where in the last few months, We've also seen, like I said, these larger exploration companies or smaller producers. So next, I think, and it will really happen over the second half of this year, I think, especially later in the year, is when the junior explorers will explode to the upside. And right now, I want to position myself for that. So what I'm willing to do right now is give up some short-term gains. Like those stocks that I've shown you that I own, like New Market, like Belosun, I still own them, but I have taken profits. And now I'm putting that money into some of the junior miners. And I know that maybe over the summer or into the fall even, the junior miners might lag a little bit, but then they'll explode to the upside. And these junior miners, the ones I pick, have good managements, have a lot of cash in the bank, are able to raise money, have managements with, with a history of, finding stocks, whatever, or finding, finding, proper, deposits and finding mines and this sort of thing. So I think this is a really exciting time for these kind of junior miners. And like I said, I'm just going to recommend one today, and I've got 2 or 3 which I really love, which have not moved yet. So, but just showing you that right there is just showing you why I think that we are in a bull market for gold. So now we go look at the market and why I think it's topping. We go look at, remember the FANG stocks. Okay, now Facebook and Amazon have acted well, but look at Netflix. This is a stock that we're actually short via puts and short in the service. And you see Netflix really looks like it's going to roll over here. If it breaks about this $80 area, it looks like there's a lot of room to the downside. And it could definitely, and then the next support area is really the $50 to $60 area. So, and Netflix, like I said in our last presentation, has had a history of these big 70, 80% meltdowns. And its financial condition, actually, believe it or not, even though it's had so much growth, is probably as bad as the stock has ever seen right now, right? And then we know Apple. I've said for a long time that Apple was the most over-owned stock I've ever seen. Even going back to the tech bubble days when everyone owned Microsoft, where I'm from Canada, everyone owned Nortel. I never saw a stock as over-owned Apple. Now a report came out that the chip shipments for the iPhone are going to be down 70 to 80% year over year in the second half of this year. So that, and now this is a one-trick pony. I have a MacBook and I have an iPad, but actually I don't have an iPhone, believe it or not. But those are the things people don't buy. Everyone buys the iPhone, and they're way, way too dependent on the iPhone. They're almost a victim of their own success. And one thing I actually like to point out to people is that this is when they released the iPhone here in October of 2014. All of the gains that came from the iPhone 6 are now gone in Apple. And with this stock being so over-owned, how does the stock go up? It's really simple. People have to buy the stock. Either short sellers cover buy or individual investors buy. Well, Apple, everybody owns it. So there's no buyers left. It's really that simple. So I think this will really lead to further losses in Apple and the whatnot. So anyhow, those are what I'm trying to say, though. Those are 2 leadership stocks. And when 2 leadership stocks like that are really starting to roll over, you're probably not in a bull market. And another real warning for the economy right now is the retail stocks. Look at Michael Kors, right? Totally has fallen apart, and looks like it's going to go below these lows and crash to a lower low. Look at Macy's. And forget the retail sales out this morning. That is Orwellian government numbers. Look at Macy's. Macy's crashing to its lowest level since 2012. And actually, if it goes below 29, and it's only $1 or $2 away from that, it will be back to where it was in 2011. These kind of bellwether names, big retail stocks like this, they are not crashing unless something is seriously wrong. This is not like, when JCPenney and Sears crashed, people were like, oh, they're in these big malls. They are, they are old economy. But now you got all of these, the ones that had held up, it's crashed. This is Staples. It just crashed on its earnings too. So this is just telling you, this is Office Depot. It crashed too. Office Depot at actually, when it went to 322 intraday, again, that's the lowest level since 2012. So all of these retail stocks are crashing. And what does that mean for the economy, right? That will be good for gold because at some point the Fed will have to print money again. But, that's why I'm so bullish on those gold stocks I showed you. But that's also why you take my technique of putting some money into shorts, putting some money into precious metals. I think this will be a great way to make money in the coming years, So that's kind of the way I'm kind of looking at it here. Okay, so anyhow, I think I'm going to leave it at that for this presentation. But I just wanted to tell you that I think we're seeing the breakouts I showed you. The gold stocks are not just in a bear market rally. This is the start of something big to the upside. And I know a lot of people in the industry and have expertise in the industry to make money in the industry. And we already have made some money, but I think there's going to be a lot more to be made. And then still, with that recent rally in the S&P, everybody is complacent. But as we can see, the S&P is just, in my opinion, building this huge top. We go look at markets around the world. Look at the Nikkei. Okay? Look, the Nikkei is actually closer to the lows here, right? Look at the DAX. And ironically, by the way, these markets have performed miserably ever since both these central banks went to negative interest rates. Look at the DAX, okay? Same thing, nowhere near its highs. So all these other markets, look at the transportation index, which tells you what goods and services are doing. Nowhere near its highs. Now it looks like it's starting to roll over again. So basically, because the large companies have the access to the cheap money, to the buybacks, can maintain their dividends through borrowing money, because money is so cheap, they're the ones holding up right now, right? And that's why the S&P and the Dow are holding up, But we're seeing many other markets around the world not confirming this and rolling over. And at some point, this, the central banks in each of the last two corrections, the Fed became very dovish for a little bit in September. Then the European Central Bank upped the QE in January, February, and Japan went negative rate. So I think they're running out of things that, like the ECB is basically tapped out. They can't do much more, and I think that's why the next decline will really stick. And now we've seen this eternal erosion. I showed you what the transports are doing. I showed you what these retail stocks are doing. So I have other shorts that I think can do well, and I'm a real contrarian. There's actually a few stocks that are blowing off to the upside what I would like to short, but I also have shorts that stocks that have already started to roll over. I've showed you Sirius in the last presentation because Sirius is down a little bit today, and I think that when Sirius comes out of this big topping formation, we can easily go back to $1.50 to $2 a share. So that's another one I'm looking at shorting right here too. And yeah, so I think I'm going to leave it at that. And again, if you look in below, I've got the special offer. It's only good till tomorrow night, till Saturday night. In our service, what you'll get is you get the monthly reports, you get weekly updates, you get weekly videos such as this one, and weekly podcasts. And it's $349 for a quarter, or $699, or for 4 months actually, and $699 for a year. So I hope you've enjoyed these videos that I've been giving you. I'm going to keep giving you the free videos no matter what. But in our service, like I said, I've got a couple junior stocks that I think are good to buy right now. We always have more shorts coming up, and that's kind of what I'm looking at going forward here. So I hope you've enjoyed these videos, and I hope you I hope you consider signing up to Addicted to Profits. Thank you very much.